the problem is with water levels to this level and many areas inundated, it's difficult to get power lines going.
We're in Murichur, one of the worst affected areas near Tambaram in the outskirts of Chennai, where we had at least 11 feet of water until yesterday. It's only now that some access has been restored to this area. You can still see the force at which water is flowing around in this area.
No power, no food. The
streets are all flooded. A couple of my neighbors' houses are still flooded.
We have rescued almost 52,539 people. They have kept in 216 camps.
The government of India stand by the people of Tamil Nadu in their hour of need.
1,000 crore रुपए का की एक इंटरीम रिलीफ हेतु मेमोरेंडम प्राप्त हुआ है.
India's fourth largest city, a city of 7 million people, is struggling to stay afloat. Chaos on the streets as people are living in literal darkness without power. Food is in short supply. ATMs are not working. It's not a good evening, but thanks very much for joining us on India Business Hour. Surabhi, there is no respite for Chennai, but we'll get you more on Chennai in just a minute. But today is the day of central bankers. You heard Mario Draghi of the ECB speak a short while ago, and Janet Yellen is now talking about what the Fed is likely to do in December. We've seen an extension of the stimulus program by the ECB, but we haven't seen an expansion. That's Yellen talking about what the Fed makes of the U.S. economy.
And on a continuing path of labor market improvement. But of course, it's highly relevant to our decisions, and the strength of the dollar is one factor that means that monetary policy for the U.S. Is more likely to follow a gradual path.
We also have global uncertainty relative to our national security and the world's security, and we seem to be entering a period of time here where violence in one form or another, whether it's domestic, international, whether it's terrorist-oriented or connected to other means, you can lay awake at night thinking of scenarios where coordinated terrorist attacks or just an acceleration of the kind of violence that we're seeing, mass shootings and so forth and so on, could have a negative effect, and I think would have a negative effect on the economy relative to people's fear of spending, going out, enjoying sports, entertainment, other types of entertainment, or going to malls and shopping, et cetera, et cetera. How does that factor into the Fed's thinking regarding its impact on the economy?
So those risks are ones that we watch very carefully, and I would agree with you that it does have the potential to have a significant economic effect. I would not say that I see a significant effect at this point, although certainly in the aftermath of the financial crisis, we've seen rather cautious behavior on the part of households and firms. And well, I think there are many different factors that contribute to that cautious behavior, the crisis itself, the slow growth we've seen. Many businesses talk about regulatory uncertainty. I would add geopolitical risk as a further factor that is causing that kind of cautiousness.
Thank you. My time has expired, and so I can show a good example to my colleagues in terms of implementing the 5-minute rule. I will call on our ranking member here, Congressman Maloney.
Thank you so much. Thank you so much, Chair Yellen. In the speech you gave yesterday at the Economic Club of Washington, you said, and I quote, "Many FOMC participants indicated in September that they anticipated, in light of their economic forecast at the time, that it would be appropriate to raise the target range for the federal funds rate by the end of the year," end quote. What are the longer-term trends that would give you the most pause when deciding the timing of liftoff? For example, how will you assess tomorrow's jobs number in the context of its long-term trends?
Well, I think the two things that we focus on most in our evaluation are economic developments that affect the labor market and also those that affect inflation, because our congressional mandate calls for us to achieve maximum employment and price stability. And therefore, in my testimony, I tried to indicate that I do see there are ups and downs. Every series is noisy. We will be looking, of course, carefully at tomorrow's jobs report. What we're looking to see is a continued solid trend of job creation that, while we're close to full employment or maximum employment, at least to my mind, there remains some margins of slack in the labor market. Part-time involuntary employment remains too high. Labor force participation is on a declining trend, but nevertheless, I think it is to some extent depressed by the fact that the job market hasn't been stronger. So we want to see the economy being on a path where we'll continue to erode that labor market slack over time. So we'll be looking very carefully at that. But we can't overweight any particular number. We need to be looking at underlying trends in the data and not overweighting any number. Inflation is also clearly very important. We articulated several years ago that the committee has a 2% inflation objective. Inflation has been running significantly below that for some time. Just as we don't want to see persistent inflation above our objective, we also don't want to see persistent inflation below our 2% objective. So as I discussed, I think much of it is transitory, but we will be looking at data to see if our expectation that it's going to move up over time will be realized, and those are key pieces.
Chair Yellen, 2 weeks ago, the House passed legislation that would interfere with the Fed's operations in numerous ways. You wrote a sharply worded letter to congressional leadership expressing your opposition to the bill, and I request unanimous consent to place that letter in the record.
Without objection, we will do that.
And you said, and I quote, that it would, quote, severely damage the U.S. economy were it to become law, end quote. Could you describe why you believe that this legislation would be so damaging to the independence of the Fed?
Thank you. Just briefly, this legislation...
Well, first there was Mario Draghi and now Janet Yellen there talking about the lift-off by the Fed, and all indications now seem to suggest that the Fed will indeed lift off. In fact, Janet Yellen saying that a delay in the lift-off will perhaps lead to a recession, but maintaining that the pace will be gradual and that the monetary stance of the U.S. Fed will continue to be accommodative as and when that first Fed lift-off does indeed take place. The U.S. markets also in the red, trading negative at this point in time. But that was Yellen. We'll keep going back and listening in to the cues that are coming in from the Fed chair. But let's also talk about the European Central Bank, which has stepped up its fight against deflation. Now, here's the big story. The quantitative easing program has been extended, but Mario Draghi has stopped short of announcing any increase in the asset purchases by the banks. Here are the key highlights from the ECB. The 60 billion euro asset purchase will remain 60 billion, but the timeline has been extended by 6 months now to March 2017. Draghi has also made it clear that the program could run beyond that stated timeline if necessary. Not just that, deposit rates have been cut by 10 basis points and now stand at a negative 0.3%. The message is clear. Draghi wants people to take money out of their banks and start spending. Here's Mario Draghi trying to assure markets that the stimulus program is working and will be extended if necessary.
We have a menu of options. Fortunately, our monetary policy has many tools. our asset purchase program is flexible. We can always adjust its horizon, its size, its design, and we are not going to be, I would say, hampered in doing this by technical issues. As a matter of fact, we are going to revisit or review some of the technical parameters of our program in the spring. This time we decided that the extension of the horizon and especially the introduction of the reinvestment would be the right thing to do. And the new calibration that was achieved after that would tell that we are confident to reach our objectives within the horizon as we planned. Which means basically we are not excluding the use of all other instruments if we were to decide that they were the right ones to do.
And European markets don't seem to be too enthused. In fact, the cuts have only gotten deeper. Now we are seeing a clear 3% plus decline on both the CAC and the DAX. The FTSE has also slipped over 2%. And it's not just that, of course, the euro continues to rally. As we can see it move very clearly above the 1.08 mark. Big move on the euro. The dollar index slipping below 100. There's been some stability after Fed Chair Yellen's remarks because she still seems to be hinting at a rate hike in December. That seems to be the situation as far as the euro and the markets are concerned on both sides of the Atlantic. Now let's turn our attention to the oil markets. Even as OPEC members debate over who should cut oil production to strike balance into an oversupplied market, Barclays slashed its price forecast, fearing that the meeting on Friday will be a non-event that will fail to revive the sluggish oil market. Barclays believes that the Association of Oil Producers will not be able to reach a unanimous view on production cuts. Meanwhile, Iran has rejected Saudi Arabia's call to join an OPEC production cut, saying it would move forward with plans to boost its output by 1 million barrels a day after Western sanctions over its nuclear program are lifted next year. And quick check on oil prices and how they are faring. There was a big slide overnight and then there's been a bit of a recovery. That is still intact, as we can see. And after that report source to a senior OPEC delegate said that Saudi Arabia would propose a deal to balance oil markets with non-OPEC help next year. Saudi Arabia has so far resisted any market intervention to prop up oil prices. Both Brent crude and NYMEX right now up around 1%. Shireen?
All right, that's the crude market for you, and watch out for the OPEC meeting that will happen tomorrow. And our markets will react to what is coming from Janet Yellen tonight, and of course how the global markets end and what's coming from Mario Draghi. But for today, after consolidating in a narrow band for 3 days, the markets took a knock, especially in the late hour. The Nifty falling about 1%. It's now slid below the 7,900 mark as the bulls lost ground. And as you can see on that graph, a very sharp sell-off coming in the last hour or so. The Sensex lost about 200 points. It's now below the 26,000 mark. There was no respite for the mid-cap stocks either. The mid-cap index lost about 0.5% or so. So it doesn't look good for our markets when we open for trade tomorrow. Remember, 3 important cues. Janet Yellen suggesting that the Fed liftoff will happen in December, but that the monetary stance will continue to be accommodative. Mario Draghi disappointing, extending the time period for the QE, but not extending the QE itself. And of course, global markets, whether it's the US or Europe, all down in the red, and Europe quite deeply so. But let's head to the big international story back home. There's no food, no power, no phones, no internet, no fuel, no ATMs, and no hope. Anger palpable on the streets of Chennai as parts of the city reel under the heaviest spell of rainfall in 100 years. The entire nation shocked, looking at the visuals of people standing on their rooftops, crying for help and scratching their hands out for food packets. It's shocking that this is happening in India's 4th largest city, which houses 7 million people. The Army, the Air Force, Navy and the disaster response forces have been carrying out rescue efforts on a war footing, but it will be an uphill task. 35 lakes in the city have burst, releasing water into residential areas. Some trains are operating, but the airports remain shut. Efforts are on to use a naval airstrip as a temporary airport nearly 70 kilometers from Chennai. The Prime Minister flew to Chennai to take stock of the situation, met with Chief Minister Jayalalitha and promised an additional 1,000 crore rupees. The centre has already released 940 crores for Chennai.
And Chennai floods have also made diesel and petrol supplies scarce. There are long serpentine queues at the few petrol pumps that are open. Shreyad Hondial and Jude Sanath bring us these ground reports.
I'm in the Adyar area, and this is what a petrol pump looks like in the evening as of now. It remains open only for 4 hours in the morning and 4 hours in the evening, because that's the only amount of time they can make it remain open, given that they have to operate on a generator backup. There is no electricity here. And just take a look at how long the line for petrol is. It's almost caused a traffic jam. There are people here with bottles in their hands, plastic bottles in their hands, waiting to get petrol. All of them, see, everyone's in a line, all of them doing it good-humoredly. There's a gentleman here who's come to get his car filled. Sir, how come you're out on the streets today, and what brings you here to a petrol pump?
Because of lack of petrol supply all over the city, so that's the reason we thought we fill complete full tank, and then we can be safe for at least 3-4 days.
How many days? After how many days are you coming out actually, ma'am?
3 days.
After 3 days?
Yes.
And what made you come out? The fact that it isn't raining today?
Yes, it is not raining.
And what have the last 3 days been like for you? You have a little child as well. Was your home flooded as well?
No, actually not. It's high level in our apartment. We stay in the first floor, so we are safe. And my son, it's been leave for the 4th week. It's nearly a month that he's gone to school.
It's nearly a month that your son has not gone to school, and you're getting petrol filled after 3 days, 3 to 4 days. You're telling me. So as I said, this is what the petrol pump looks like. A bit of chaos. It's extending right towards the main arterial road, causing a bit of a traffic jam. But then again, as I said, this pump will be open only for 4 hours. And if people want petrol, they have to come at the designated time and get it. So I'm reporting from Adyar in Chennai with Vijay Pradeep Das.
Well, the problem really with Chennai is not so much waterlogging as it has been in the last couple of days. There's been a crisis of supply of essential commodities and, of course, power that has gripped the city by storm. Now, if you just pan, if my cameraman could pan a little to my right, you can clearly see how the complete Mylapore area where we're currently at is bereft of power. This has been the situation for close to 36 hours now, and it's quite hard to imagine really that a city of 7 million people is completely powerless, and that's the case not just in this area but in several other areas as far as Chennai is concerned. Areas like Ananagar, Nugambakam, Saidapet. Most of these areas which have been heavily hit by the floods, prime areas of the city really, have suffered from a major power crisis. Now, there's also been a big queue for essential commodities. I can tell you for a fact that fuel pumps, ATMs, groceries have also been badly hit by this demand for essential commodities, simply because there is a shortage of the same as far as Chennai is concerned. People are wanting to stock up, and this essentially means that several people are making a beeline to such establishments to get their essential commodities in place. But on the, heartwarmingly enough, a number of companies have opened their doors to aid in rescue and relief. We can tell you that Phoenix Market City, for instance, and SPI Cinemas have opened their doors to take Chennaites in and to house them, even as several people are rendered homeless, without food, in fact. Cafes and restaurants have opened their doors and have started serving food to these people. So it's been a very mixed tragedy really as far as Chennai is concerned. You have the deluge on one hand and you have heartwarming stories like these on the other. So that's Chennai for you. The city is hoping to get back to normalcy. If light to moderate rainfall remains, that could perhaps happen sooner than later. But one thing's for sure, this city's fingers are certainly crossed. With that, it's back to you.
Well, our reporters there are getting us what's going on the ground in Chennai. The situation has taken a massive toll on the entire industrial sector in the region, with all offices and factories being forced to be shut for 3 days now, and more instances of damage. The latest company to report a loss of 6,000 motorcycles is Royal Enfield. The manufacturing plant is located in Chennai. Some corporates have come to extend their hand of support for the stranded, while telecom companies have already announced recalls. Online recharge apps like Paytm and Bounty app have decided to provide free recharge to people in Chennai. Food app Zomato has also decided to distribute free food in the city, and multiplexes and malls have opened up their doors to provide food and shelter to the stranded. Now, Tamil Nadu may be drowning, but 9 other states in the country are thirsting for a drop of water and have approached the central government now for emergency drought relief. Rituparna Bhuyan and Archana Shukla report that with India in the throes of one of the most severe droughts in recent times, the numbers of drought-hit districts is expected to rise in the coming weeks.
Land where essential crops like wheat, oilseeds, pulses and cotton are usually grown. And the visuals of parched farmlands like these is a common one as one travels through many regions in the country. The monsoon deficit this year has hit 14% from 12% last year, leaving this year's crop either destroyed or stunted. And crop yields have dropped by as much as 60% in some of the worst affected regions like that of Marathwada. So far, 302 districts out of 640 in nearly 18 states in India have experienced rainfall that came in at least 20% below normal. Of these 302 districts, nearly 192 districts from 9 states have already sought drought relief from the central government. With the demand from just 6 of these states exceeding 20,000 crore rupees, the central government has fast-tracked the assessment of drought-hit regions and even recommended assistance to 2 states. However, the amount sanctioned in both these cases is far lower than asked for. For instance, Chhattisgarh will get 1,387 crore rupees in central government aid against a demand for 4,000 crore rupees, and Karnataka will get just 1,540 crore rupees instead of the 3,800 crore rupees it has requested. This precedent has even the NDA's allies a little worried.
सिर्फ डिक्लेयर करने से कुछ नहीं होगा. महाराष्ट्र में आज और कल 2 दिन में मिलकर 17 किसानों ने आत्महत्या की है. हमने 4,000 करोड़ की मांग की है कि हमें आप रिलीफ दीजिए किसानों को, लेकिन अब तक सेंट्रल के तरफ से उस बारे में कोई कदम नहीं उठाए गए हैं.
The compensation works out to around 2,700 rupees per hectare for farmers, which experts say does not even cover the costs of cultivation. What's more troubling for state governments is that the entire assessment process preceding the grant of relief funds can take 3 to 4 months, meaning actual disbursement to farmers could take anywhere between 6 to 8 months. This, experts say, could wreak havoc on the next sowing season.
I think it is a national emergency that you've got to look at it. We've got floods one side destroying standing crops. We've got drought. So the need of the hour is crop planning.
Some states like Jharkhand have come up with farmer relief measures on their own in an attempt to hold the fort till central funds trickle down. And with sowing of winter crops in many regions already lagging by 18%, the governments are running out of time. With Rituparna Bhuyan in New Delhi, in Mumbai, Archana Shukla.
Well, joining us now to discuss this very grim situation, Yogendra Yadav from Swaraj Abhiyan. They've conducted a detailed study of the drought situation in the country. Yogendra, appreciate you joining us here on CNBC TV 18. The reason you're here on the show is because Swaraj Abhiyan has conducted a survey of just how grim the situation is. We heard some of the parliamentarians today that we interviewed talking about this being a national emergency. Drought now being declared across 9 states in the country, and of course you have floods in Chennai at this point in time. Just how bad are things on the ground, Yogendra? What does your survey tell you?
Shireen, yes, we did a survey in Bundelkhand, and other than that, I personally traveled for 15 days, for 4,600 kilometers across all the most severely drought-affected areas from Karnataka to Haryana. Just before we started discussing this subject, I was listening to your report from Chennai. Heart-rending situation, spot-on reporting, quick reporting. And you know, I really wished someone did this kind of reporting on drought. I know drought is less fantastic. It is not as, doesn't give that kind of footage. It's not that dramatic. And it doesn't affect people who have ATM cards and such like. But honestly, as I traveled, this was such a heart-rending situation. The kind of things your reporters were describing just 5 minutes ago. No water, no food, and in their case you can add no employment, no seed. And the situation in Bundelkhand, where we carried out our survey, we picked up in Bundelkhand because contrary to popular impression, it seemed to us that the heart, the epicenter of this drought is not Marathwada. It is possible Bundelkhand. So we did a survey there. And the survey brings out elementary questions. I won't bore you with all the statistics. We asked people in the last 1 month, how often did you eat dal? 39% people say in rural Bundelkhand that they have not had dal even for 1 day. 60% people are saying not a drop of milk in the last 1 month. This is the kind of situation we are dealing with, and I really feel, Shireen, that as a country, we have been so indifferent. If you watched English media or Hindi media of this country for the last 3 months, you wouldn't get a sense that there was this drought. This drought could well be happening in sub-Saharan Africa for anyone who cared in these metropolitan centers of our country.
No, you're absolutely right, Yogendra, and I don't mean to be insensitive and say that, you know, we've been focusing on it here on CNBC TV 18, but we have over the past 1 year. Our series is called What's Ailing Rural India, and our colleague Archana Shukla has been traveling around the country, specifically in Marathwada and Vidarbha, bringing us those stories. But leave that aside. Let's talk about the situation on the ground and what needs to be done at this point in time. State governments are writing to the centre for central assistance. We understand that what the centre will be able to finally provide is much lower than what states are asking for. You know, in terms of the immediate intervention, what is the need of the hour?
Shireen, what your correspondent described is absolutely true. The states are being offered pittance. And the point is, this is not happening for the first time. This is an annual ritual. Whenever drought takes place, states come up with their estimates. The center says, sorry, we can offer you this much. And the problem is there is no rational system. We as a country must realize that when crop damage takes place, which is a routine occurrence, it happens somewhere or the other in the country every year. This year has been particularly bad. We have to have a system, and there is no system in the country. The entire crop compensation measures, these crop relief measures, are too little, too late, they are arbitrary, completely subjective based on visual impression of officials, they are discriminatory, and they simply don't reach the people because of corruption. So we need, there are two kinds of systems with Government of India. There is a relief package, which is a bit of a joke, because finally what you get, as your correspondent said, something like 2,000 to 3,000 per hectare, which is to say for 1 acre of land you get about 1,000 rupees. So for 4 months, 5 months of your labor, when you had looked forward to a crop that would yield some 50,000 rupees, you get a compensation of 1,000 rupees. This was sought to be supplemented by insurance schemes, all kinds of insurance schemes. Right. But my experience of going through all those insurance schemes suggests that they have been a complete failure. So we need to devise a new system, and I would like to make some suggestions about that if you have time.
Sure, go ahead.
What we need is to combine these two things called relief and insurance. And what we need in this country is nothing short of a comprehensive compensation for farm crop loss. Comprehensive in the sense that it should cover all farmers of the country, it should cover all crops, and at all forms of damages at different stages of crop. How do you do that? Certain minimal should be covered by the state. 100% subvention by the state should do it. And it should, all the money that is put every year into all these various schemes of relief which never reach the persons, all that money should be pooled and put into that one single scheme. Over and above that should be insurance, which should be voluntary. Although even there, the state should pitch in with some 75 or 80%, which is what happens all over the world. Agricultural insurance is largely underwritten by state all over the world. So first, a minimum layer of compulsory, comprehensive minimum assurance, and then optional, which is largely subvention from the state. Unless we come up with something like this, we have a very serious situation, because it is agrarian crisis coupled with climate change. So what used to be freak phenomena, like what's happening in Chennai, that's becoming the norm. Irregular is now becoming regular. That's our crisis.
That's right. Well, Yogendra, we can continue this conversation. I don't think we can do justice to it in the 10 minutes that we have on this show, but we will continue to talk with you and continue to discuss what could be the short-term, the medium-term and the long-term interventions that are required on the policy front, both at the central level as well as the level of the state government. But for today, appreciate you joining us here on India Business Hour. That's Yogendra Yadav there. 9 states now being declared drought hit at this point in time, and that could get even worse. US. Now, here's another CNBC TV 18 exclusive tonight. The panel led by the Chief Economic Advisor is set to table its report on the revenue-neutral rate for the GST tomorrow. Nayantara Rai and Sapna Das report the panel is likely to recommend a rate of 18%. We also learned that the government may yield some ground and agree to some of the key demands made by the Congress party.
Even as the political tug-of-war continues, the panel led by Chief Economic Advisor Arvind Subramaniam is all set to submit its report on the GST revenue-neutral rate. And as CNBC TV 18 has been consistently reporting, the panel is likely to propose a maximum 18% rate. Sources say the panel may also bat for 3 different rates: concessional, lower and standard. Sources say essential goods will be taxed at concessional rates, precious metals will be under the concessional rate, and cigarettes, aerated beverages and luxury cars may be taxed at a higher rate. But Congress and the BJP are still not entirely on the same page over the goods and services tax. In a renewed push to end the stalemate, the government has decided to make some concessions but also wants the Congress to meet it halfway. Sources say the centre is ready to scrap the 1% manufacturing tax and also set up an independent dispute redressal mechanism as demanded by the Congress party. But there is still one major flashpoint. Both sides are still at loggerheads about incorporating the GST rate into the constitutional amendment bill. Government sources say even former Prime Minister Manmohan Singh sees the merit in not incorporating the GST rate in the bill. The centre is also leaning on this man to forge a consensus. Sources say Bihar Chief Minister Nitish Kumar has been in talks with all top BJP leaders. The legislative calendar for GST to be rolled out from next fiscal is ambitious to say the least. The clock is ticking. With Sapna Das and Nayantara Rai in New Delhi, in Mumbai, Surabhi Upadhyay.